Okay, look at the numbers right now. If you track conflict by the money trail, the spreadsheets are practically shouting.
Yeah, it's pretty stark, isn't it?
It really is. We're seeing hard data now showing Russian fuel exports have just cratered. We're talking the lowest daily average since, well, since the very start of the full-scale conflict back in early 2022.
And it's not just a blip, not a one-off.
No, exactly. This looks like a sustained, measurable economic hit aimed right at their energy sector. Welcome to the Military Point, your ultimate source for sharp insights, analysis, and updates covering today's most important topics.
Great to be diving into this.
Before we continue, tell us in the comments, where are you watching from? We'd love to know. Don't forget to like this video and subscribe for more updates.
Yeah, let us know.
Okay, so let's try and unpack this because we've got, a stack of sources here. Bloomberg, Vortexa, the IEA.
Right, solid data points. And we're all kind of painting a picture of how these very specific ongoing strikes against energy infrastructure are causing a real supply shock.
A shock that's hitting them at home, on the domestic pumps, and hitting their international buyers. So the mission for us today, really, is to focus squarely on that financial fallout.
Exactly. For you listening, we want to bring some clarity. We're pulling together this data to get a handle on the full scope of the damage, which specific fuel products are getting hit hardest, some might surprise you, and crucially, these long-term recovery forecasts. They're quite something.
Let's start with that headline number then, the one that really sets the stage. Average daily fuel exports, so that's everything. Gasoline, diesel, naphtha.
All refined products, yeah.
Plunged to just 1.88 million barrels. That was in the first 10 days of October.
1.88 million. And like you said, that's the lowest we've seen it recorded since the conflict ramped up in early 2022.
And what's really telling here is this isn't some random fluctuation. It seems to reflect a strategy, right? Targeting the refineries, the places that actually make the usable fuel.
Precisely. It's about hitting the conversion capability. You can pump crude all day long, but if you can't refine it into gasoline, diesel, jet fuel, well, the economic pain hits fast.
So how badly has that refining system been hit overall? What are the numbers telling us there?
Well, the overall refining output seems to be hovering below 5 million barrels per day now. Again, a level not seen since spring 2022. But the key metric for the industry, I think, is throughput.
Throughput. Explain that quickly.
Sure. It's basically how much raw crude oil a refinery actually processes into finished products. And that number, since these attacks really ramped up, has dropped about 10%.
10%. So straight 10% cut in the actual gasoline, diesel, whatever that they can sell.
That's the direct impact. 10% less usable product for domestic use or for export revenue. That's a huge hit to capacity.
Especially when you think about the scale. We're hearing reports, over 20 major refineries have been damaged?
At least, since the campaign intensified. So this isn't just one unlucky facility. It's widespread, systemic damage across different regions. Repairing that is complex.
And doesn't this coincide with their usual maintenance schedules too, making things even worse?
Exactly. It's kind of a perfect storm. Many refineries were heading into or are in planned seasonal maintenance anyway, so the system's already stressed from the attacks, losing throughput, and then facing necessary downtime on top of that. It just compounds the losses.
Which naturally raises the question. If throughput is down 10%, what's the knock-on effect inside Russia? Because they took an action recently that really signaled, desperation.
They did. This is probably the clearest real-world sign of how bad the crunch is. The government actually banned gasoline exports completely.
Wow, that's a big move for a major energy exporter.
Huge and politically risky. They did it specifically to try and ease domestic shortages, stop prices rocketing at the pumps because refining output had slumped so badly. Think about it. They cut off a reliable source of foreign cash just to keep local drivers happy.
Sacrificing export billions for immediate political stability. That single move, the gasoline ban, tells you almost everything you need to know about the state of their refining infrastructure right now.
It really screams crisis. And you have to think, if it's hitting gasoline that hard, a relatively basic product, what's happening with other, maybe more specialized fuels?
Well, before we get into the specifics, just a quick point on the reach of these attacks. It's not just near the border, is it?
No, not at all. Analysts highlighted one strike on a refinery way out in western Siberia, Tyumen region.
Siberia. That's deep inside the country.
Potentially the farthest strike yet. And that matters hugely for risk assessment. If facilities that deep are vulnerable, it makes planning repairs, let alone expansions, incredibly difficult. It underlines that nowhere feels truly safe.
Okay, so let's pivot to those other products. Because here's where the data gets really, really interesting strategically. Forget gasoline for a second. The sharpest hit seems to be on something called naphtha.
Naphtha, yeah. Not a household name, but crucial. It's a primary feedstock for the petrochemical industry.
So used to make plastics, synthetics.
Exactly. Plastics, synthetic rubber, solvents, lots of high-value industrial chemicals. It's a major non-fuel export, bringing in big money,
Yeah.
especially from Asia.
And the strikes were surgical here, targeting how it gets out of the country.
That seems like it. The Ust-Luga terminal data suggests it handles something like 60% of all their naphtha exports.
60% through one terminal.
That's the figure we're seeing. So taking that specific terminal offline, even partially, is a massive blow to that particular revenue stream.
And the numbers bear that out.
Oh, absolutely. Naphtha shipments just plummeted, down 43% month on month, just in October.
43%, wow.
Yeah. Which pushed the daily export volume down to about 198,000 barrels a day. Again, lowest point since January 2022. You can't just shrug off that kind of loss in a high-value product.
But, okay, need to add some nuance here. It wasn't all bad news for their exports, was it? Some things actually went up.
That's right. And the contrast is important. While naphtha, cratered, and gasoline exports were banned, Vortex's data showed diesel and gas oil exports actually rose by about 13% compared to September.
Rose. How does that work?
Well, fuel oil exports did decline slightly, about 8%. But the rise in diesel and gas oil, it looks like strategic prioritization. Meaning they're likely pushing the refineries that haven't been hit as hard to maximize production of the most critical export earners, like diesel. They're essentially sacrificing naphtha, sacrificing domestic gasoline supply to keep the diesel cash flowing as much as possible.
Like energy triage. Focus on what's working best, or is least damaged.
Exactly. Maximize the most profitable, least affected segments, even if others collapse. But even with that shuffling, this disruption we're seeing, it's not short-term. The consequences look set to last for years. And the International Energy Agency, the IEA, they've put out a pretty stark assessment on this.
Okay, the IEA, what are they saying?
Well, first, they estimate a really high damage rate. Their calculation is that 1 in 3 major refineries has been hit just since August. 1 in 3.
That's an incredible rate of damage.
It is. But the real headline, the thing you really need to grasp, is their prediction for recovery.
Right, the timeline. This is where the long-term economic cost really hits home. What's the forecast?
The IEA estimates that overall refining output is unlikely to get back to normal, pre-strike levels before June 2026.
June 2026. Wait, that's over 2 years away?
2 years. It's a shocking timeline, and it reflects just how complex and difficult it is to repair this kind of specialized industrial kit. Cracking units, control systems. You don't just pop down the shop for spare parts.
No kidding. June 2026. That implies analysts are already baking in years of reduced output, even if things froze right now. And you mentioned earlier, that forecast doesn't even account for future attacks, does it?
Correct. That June 2026 date assumes no significant additional damage. If the strikes continue at the current pace, that timeline could easily stretch even further out.
Which inevitably creates ripples globally, right? Particularly for the big buyers who rely on these Russian products.
Absolutely. Especially those high-volume petrochemical buyers thinking mainly about Asia here.
Taiwan comes to mind. They were buying a lot of this naphtha, weren't they?
Huge amounts. Along with India, they're one of the biggest buyers. Taiwan actually ramped up imports 6-fold in the first half of this year compared to 2022. We're talking $1.3 billion worth. Their supply chain is now seriously exposed.
And it's not just about whether the ships can physically load. There's a political risk, too.
Exactly. There's geopolitical uncertainty on top. Taiwan's own economy minister recently said local companies would stop buying Russian naphtha if the EU asked them to.
Ah, interesting. So the supply disruption itself creates this whole secondary layer of risk aversion for customers. They start looking elsewhere just in case.
Precisely. It chills the market.
So pulling it all together, what's the big picture here? This focused drone campaign, it's clearly moved way beyond just harassment.
Oh, yeah. It's achieved quantifiable long-term economic damage. It's hit refining capacity hard, messed up the domestic gasoline market to the point of forcing export bans, and crippled key petrochemical exports like naphtha.
The data from all these sources, Bloomberg, Vortexa, IEA, it confirms this isn't just about battlefield gains. It's infrastructure warfare designed to disable capacity long-term.
The core takeaway for you listening has to be that the damage is strategic, it's measurable, and it's going to last. We're looking at systemic industrial problems that need deep, complex, expensive, and time-consuming fixes. And it's forcing the government into tough economic choices, like that gasoline ban.
So here's the final thought to leave you with. If the IEA's June 2026 recovery estimate already factors in the damage done so far, what happens? What happens to global energy markets and to Russia's own economy if these long-range strikes not only continue, but maybe even escalate in frequency or capability?
That is the multi-billion-dollar question right now, and it's one that has energy traders and analysts everywhere watching very, very closely.
You've been listening to The Military Point. Stay sharp, stay informed, and we'll catch you next time.